This is the Weekly Outlook here at XM.com. Thanks for joining us. I'm Christina Marujos, and with me today is lead investment analyst Raf Boyadjian to have a look at the upcoming week. It does have several events coming up. They will attract investors' attention. However, the underlying theme is still geopolitics and how developments unfold on the Ukrainian front. Starting with the United States, Rafi, the Fed minutes are out on Wednesday. They're unlikely to reveal anything new, but markets might pay attention to what has been discussed by FOMC members regarding the reduction of the balance sheet. What could that mean for Fed rate hike expectations of the dollar this week?
Well, Christina, markets have already priced in quite a steep rate hike path for the Fed. And even though the Fed has become much more hawkish lately, we don't know whether or not the Fed will be able to raise interest rates as many times. But markets aren't really, markets seem pretty certain that the Fed will need to get very aggressive at the very least. The thing with the minutes is that we've already had quite a few Fed speakers come out. Since the last meeting, we also had Chair Powell speak as well. And overall, we're getting the sense that most policymakers favor or would support 50 basis points rate hike at the next meeting in May. So we're probably not going to get anything new out of the minutes on that front. But like you said, what they discussed on the balance sheet will be important because there's some expectation that the Fed would announce a decision at the last meeting. They didn't do that. They put that off until May. And we haven't really heard that much of what the Fed is planning to do with the balance sheet. Probably, they're going to put it on autopilot like they did last time in terms of allowing the maturing bonds to roll off. So, any details about the pace of that could be a market mover for, at least for the bond market, if not for the US dollar. We're also going to have, it's also remember to that we're also getting the ISM non-manufacturing PMI. So that is more forward-looking indicator. We might get some signs in that perhaps business confidence is being affected by the Ukraine war. On the whole, the US economy is doing well. Probably too early for any impact to show up in the data just yet. So overall, the dollar will probably take its cues from what's happening on the geopolitical front, whether or not we get any more meaningful progress in the peace negotiations between Russia and Ukraine. We've already seen the dollar come off its highs due to some de-escalation, but we shall have to wait and see whether there's going to be any further developments with the talks.
Crossing into Europe now, the ECB's minutes are out this week as well, but the euro lately has been taking its cues from the war front. Is there anything on the calendar that might move the single currency this week?
Well, we are getting some data. There's going to be German industrial production, industrial orders, Eurozone retail sales. We're also going to have the final PMI readings. Now, this will probably be a bit more important because we did already see some impact of the Ukraine fallout on the survey data in the flash readings. If we get any downward revisions, that might affect the euro because there are heightened risks of a recession for the euro area. We're also going to get the Eurozone Sentiment Index. That's another survey that might matter for the single currency. But on the whole, because it is a little bit too early to see how significant the impact will be from the sanctions against Russia on the Eurozone economy, I think it's just going to be mainly, once again, down to the headlines that's going to be driving the euro. We already saw the euro get a boost on the reports that Russia will scale down its operations around Kiev, and also that there might be seeing some talks of progress. But of course, we are getting some conflicting reports on that as well. So once again, any fresh headlines about how the negotiations are going, about whether or not the military offensive is getting more intense or not, and of course, with energy prices as well, what happens to that? That's going to play a big role too on which direction the euro takes, because of course the eurozone economy is very energy dependent on Russia, and it's already seeing a big energy crunch.
Now let's cross into Canada. Let's have a look at Canadian employment numbers. They're out on Friday, as some argue they might actually tip the scales over at the Bank of Canada for a 50 basis points rate hike at its next meeting. Do you think that's a real possibility?
So we have seen some hawkish language from the Bank of Canada too, like the Fed. There's growing expectations that the Bank of Canada at its next meeting will raise rates by 50 basis points, and the labour market supports that. The labour market is very tight. It's bouncing back very strongly following those slight restrictions we had early in the year due to the Omicron wave. So we are expecting another strong labour market report on Friday. So should we see another big increase in employment numbers for March, that would definitely reinforce expectations that the BOC will move by 50 basis point increments at its next meeting. It's also interesting that the Canadian dollar is now seeing a bit more substantial gains on the back of the rally in oil prices, because that boost only came into effect once the Canadian government kind of said that they will step up their own oil production, because there was up until recently the Canadian dollar didn't really benefit much from the rally, because the Canadian government had kind of been, it's kind of been focusing on its green energy policies, and also being against new investment in the oil industry. So that maybe is slightly being having a bit of a rethink on that. So that's why we're possibly seeing a bigger boost for the Loonie. So if we get another confirmation from the jobs report for the economy as well, that would also provide another strong support for the Loonie going forward.
And Rafi, before I let you go, let's have a look at the Reserve Bank of Australia, which meets on Tuesday. Investors are not anticipating the RBA to join its peers in the rate hike cycle just yet. But what could that mean for the Aussie?
Well, the Australian dollar has done well during this crisis because of the huge surge in commodity prices, and that's going to be probably what's going to be leading the Aussie still in the next few weeks. The RBA, they're kind of playing it safe for now. They're saying they're going to be patient, although money markets have priced in 200 basis points rate increase for the year, starting in June. Now, June is a very possible date when the RBA will raise interest rates, but whether they're going to be as aggressive as the markets think, that remains to be seen. The RBA will probably repeat its message that it wants to see inflation reach 2 to 3% target band sustainably, and for that to happen, though, they will also need to see sustainable rise in wages, which we don't have just yet. But this is probably something more for the future as far as the Aussie is concerned. For now, I think it's all about this big rally in commodity prices, as well as the slight improvement in risk tone we've seen on the back of the escalation in the war in Ukraine. That's kind of giving a nice lift to the Australian dollar.
Rafi, thank you for joining me today, and thank you for watching the Weekly Outlook here at XM.com.